FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And again, welcome back to Trading with Market Makers 2024 and week 14. So we've talked a lot about the entire strategy already for the past 13 weeks. We've talked about pretty much every aspect of the strategy. Now, what I want to cover in this week is going to be something that a lot of you have been asking me pertaining to how can I trade this strategy if I can't look at the charts every single day, or at least if I'm working during the New York session, or if I'm working during the London session. How can I take advantage of the strategy if time is of the essence for me and I cannot sit in front of the charts all the time during that specific window that we're talking about? So we're going to go ahead and in week 14, we're going to break down for you a way that you can go ahead and trade this strategy without being in front of the charts all the time or within the specific window that I talk about. Guys, if you're new to the channel, hi, my name is Mark. I've been trading since 2011, and I'm just here to share my strategy and tell you how I trade. Hopefully something about my strategy can help you in your own trading. So please make sure this is the first video. Go back to the playlist, FX Mentoring 2024, and just start from week 1 so you're not lost on what we're doing. But let's go ahead and get started on week 14, and we're going to go ahead and talk about swing trading. So how can you take the strategy that we've talked about for 12 weeks and essentially apply it to swing trading? Well, I'm going to show you how to do it. Let's get right into it with swing trading. So the first thing is we're going to make this very simple for you to follow as far as what you're going to do for swing trading. First thing is we're going to use new peak formations in order to find the pairs to trade. So with this swing trading strategy, all we're focused in on is number one, finding new peak formations. That's it. Okay, that's the first criteria, is we're only worried about trading pairs with new peak formations. Second thing is we're going to use the same requirements that we already use to help confirm the peak formation. So the same system that we use to confirm peak formations, we're going to use the same thing here as well. So meaning we're going to use 1350 crossovers, we're going to use the break of structure, we're going to use 1 times ADR away from the peak. We're going to use the Fibonacci Retracement tool to help with the entries, and you're going to use a minimum of a 2-to-1 risk to reward ratio. That's pretty much it. Now, as far as the entries goes, it's going to be pretty simple again with the entries. Must have a new peak formation confirmed. First major pullback after the 1350 crossover is what we're going to use. We're going to set limit orders to either the 50 or the 618 using the Fib retracement, and stop losses are going to go above obviously the previous peak formation that just formed. Take profit is going to be 2-to-1 risk reward ratio with previous structure. I'm going to show you all this on the charts, but I just want you to visually see like what we're talking about as far as entry rules. It's not a lot of stuff to figure out here. All right, so it's going to be very simple to follow, very simple to trade, essentially, which is the point. So let's go ahead and let's get to the charts so I can break this down for you, and let's take a look at examples, good and bad, so you know what to expect from the actual strategy itself. Okay, so we're looking at Euro AUD on the 1-hour time frame. You can see here that we have a peak formation high here that we have. Okay, we have the confirmations, which is the 1350 crossover that happened here. We have it breaking the previous structure right here as well. And then we have it obviously moving 1 times its own ADR. So all those rules are met, so we know that that is a good peak formation. Okay, so now that we have the peak formation, we're basically looking for the first major pullback that happens after the crossover. So the crossover happened up here, okay, and then this starts the major pullback here. So all you're going to do is, once you identify a pair that has a brand new peak formation, we're going to go ahead and just grab the fib retracement tool. We're going to start from the top, and then we're going to go to the bottom of that first major pullback. And then guys, all we're looking for out of this is for price to either come to the 50 or to the 618. That's it. That's all we're looking for price action to do. If it doesn't go to the 50 or 618, there is no trade. That's it. Okay? Nothing complicated, nothing crazy. All right, this is all on the 1 hour chart, by the way. We're not using any other chart, just 1 hour time frame only. That's it. So what determines whether you should take a trade on the 50 or 618? Well, honestly, that's up to you as a trader. If you're a more aggressive trader that likes to be in the market and you want to make sure that you try to not miss out on any potential trade, then you would probably want to do the 50% retracement as your entry. If you're a more conservative trader and you want to try to pick out the absolute best, entries and things of that nature, then 618 would be for you. Okay? Either way, you have those two options. As we start to play this out, okay, I just want you to notice what happens. You could see the pullback went right to 618. It also went to the 50, right? So if you basically have a sitting order, so if you're back here, let's say you're here, let's say we are here, and you see that this is the first major pullback, all you're basically doing is you're placing a sell limit order, okay? A sell limit sell order. If you're trading the 618, you're going to put out the 618. Okay, your stop loss is going to go above the previous peak formation high, which is here. And then as far as your take profit goes, 2-to-1 risk to reward, right? So 2-to-1 is going to be right here. Now, coincidentally enough, here's what I want you to notice, that if we go 2-to-1, if we just take a look to the left, right, you see these pullbacks here from previous price action. That's where we want to target our take profits to. Okay, so this one just coincidentally happened to be almost exactly at 2-to-1. Okay, but any of these points, when you look back to the left, so we're talking about this point here, this pullback, clearly this pullback as well. Any of these points here, okay, you can use as take profits. If we go ahead and we just play this out and see what ends up happening here, so you can see, we know that it went to the 618 retracement line and to the 50. You got into the trade, and then now it's just about letting it play out. Okay, you already know what you're risking up front. So in this case, you're risking 75 pips to gain essentially 2, which is what, 151 pips. Okay, so obviously because this is a swing trading strategy, yes, your stop loss is, your risk is going to be more. So you need to adjust your lot size accordingly to your capital for obvious reasons. Because you're not talking about 15 pips now, we're talking about 75, 50, depending on the actual pair that you trade. So if we play this out, you can see that it starts to move down slowly but surely, and it ends up going into our take profit. Okay, and you can see it goes all the way down, hits your take profit, and then retraces. Now, what happens? How do you manage, the trade itself once it's going? Well, that's honestly, again, up to you as an individual trader. What type of a trader are you? Are you the type of trader that you want to babysit trades, or are you the type of trader that says, hey, this is my trade setup, and I'm either going to win it or I'm going to lose it? It's completely up to you. Okay, that part of it is completely up to you as far as who you are as an individual trader, because everybody's different. So everybody has their own flavors of how they like to, go ahead and follow trades. A simple thing that you can do is you can go ahead and set the trade up once you're one times, in profit. Basically, once you're up 75, 75 pips or so, you can move it to break even. That way it's a no lose situation for you from there. And then anything you get after that, then obviously you can go ahead and start moving your trailing your stop loss. Basically, once you get to 2 to 1, start moving it down to 1 to 1 risk to reward ratio. So essentially you're guaranteeing yourself 75 pips in this case. Okay, if it goes lower, anything lower than that is like a gift. So if it keeps going down, let's say it's at 2.37, bring it down to 2 times ADR, whatever it is that you want. It's completely up to you how you address that issue. I'm just showing you just the overall simple strategy that you can use. How you manage it is going to be honestly up to you as an individual trader. The way I would manage a trade was going to be completely different than how somebody else manages a trade, because we each have their own styles. We each have their own things that we like and what we don't like. Okay. But in this case here, you can see that price continued to go down because obviously we are going away from a peak formation high. So we are expecting the market to sell off. Okay. So in this case here, this actually went down to the previous peak formation high. So this ended up being, even up to right now, over 3.5 to 1 risk to reward on this particular trade. Okay, now that's one trade. Now let's just go back to the previous peak formation low here. Okay, and let's see, is there a trade here that we could have taken back up again? So what are the first requirements? The first requirement, obviously, is a peak formation low. Okay, well, how do we know when a peak formation low is created? Well, obviously, we know that from the previous videos in our mentorship, I believe it's like week 2 or 3, that we need a couple things in place for that to happen, right? We need to have 3 times ADR movement from the previous peak formation. We need to have the 1350 crossover. We need to have a break structure, and then a 1 times ADR. So in all this scenario here, we're looking at the crossover that happened here. As you notice, as you're looking at prices here, the EMAs never crossed over. So it didn't cross over till here. And then you had a pullback. The first major pullback really isn't all the way up till up here, but this is also a pullback. And you have to remember that at the beginning, as you're reading this in real time, okay, because you're not going to have the luxury of looking at the entire move, right? In real time, you're going to possibly see this as that first major pullback after the crossover, which is completely fine and normal. There's nothing wrong with that. Okay, let's just say you put in your fib like this. Okay, and here are your 2 entries, the 50 and the 618. That's it, right? Now the next question is, does price actually go to them? No, it doesn't. Okay, so this would be a trade that you would not take. Okay, it just would not be a trade that you would take. Even if you used this up here as your first major retracement, which is fine. Again, price action did not retrace to the 50 or the 618. So guess what? There is no trade. Okay, there is no trade at all. Nothing. Okay, so there's no trade. So you don't have to worry about it. All right. Certain things have to be in place for the trade to happen. And if they're not in place, there is no trade. Now, here is another example. You can see peak formation high. Right, coming up here, we don't have the crossover until right here, right? So crossover happens right here, and then we're just waiting for the first major pullback. The first major pullback is this right here. So again, if you do the fib, and you can see clearly we did not go up to the 50 or 618. So again, there is no trade. I'm showing you this because I need you to understand that it's not going to happen every single time. You're not going to have a pullback that goes to the 50 or 618 after every peak formation, low or high. So very important for you to understand that. Okay. Now, another question that I'm sure a lot of people are going to ask is, can we do it after a reset? Okay. Can we do the same strategy after a reset? Because essentially it is the reset itself is another peak formation. Yes, you can do it during a reset as well. So the reset really is another, in this case here, it's another peak formation high. Okay, that's all it is. It's a new peak formation high. So can you do it here? You can, yes. So as you can see here, the crossover happened here, and here's the thing that you need to understand about doing it when resets happen. Okay, because when resets happen, you're not going to know that it's a confirmed reset after it breaks below this low here. Okay, so that's one thing. So if you're going to do a reset, if you're going to do it from a reset, please write this down. Okay, if you're going to do it from a reset, you need to make sure that your reset is confirmed before you take a trade or try to open up a position or anything like that. All right, so what are the confirmations for a reset? Okay, the very first confirmation is that it needs to break clear of the previous peak formation. In this case, it was because it's going down, it's a previous peak formation low. So it needs to break this peak formation low first. Okay, that's the first thing. The second thing is, yes, you need a crossover, which you'll generally get anyways, right? And then you'll get the 1 times ADR already. That's all good and fair. And then this right here is the break of structure that you would need. So remember that in a regular peak formation, right? Let's just say this is a peak formation. You need the break of this structure, right, to confirm the peak formation. And then we're waiting for the pullback, right? That's essentially all you're doing. You're doing this. On the reset, very important that you wait for the break of this structure as well, which is the previous peak formation low. Now, in this particular example here of a reset, the first major pullback is all the way down here after the crossover. Okay, so you would essentially do this. There's your fib, and again, it does not retrace all the way up to the 50 or 618. Okay, so I'm going to keep harping on this. If it does not retrace to the 50 or 618, there is no trade. All right, there's no trade. Now, let's talk about bad examples or bad trades. Right, here's an example right here. A peak formation low is created. You have the crossover, and then you get your first. You have your break of structure here, and then you have your first major pullback, right? So you would typically do this right here, right? There's your retracement, and then you're waiting for a 50 or 618 retracement, right? Well, in this case, you would have set the order, and then eventually you could see, because it's a reset, it would have taken you out. So that would have been a loss. What's going to end up happening is when you have resets, you're going to take losses. You're going to take losses when you have resets. So how can we avoid that from happening? You can't. All right. You can try to mitigate it as low as possible by looking at the higher time frames. Okay, but you're not going to be able to avoid 100% of the resets. It's just not going to happen. All right. So what do I mean by looking at the higher time frames? Well, let's look at the higher time frames in this section here. So let's go back to where the reset is. Let's get rid of all this stuff here, and let's just go to a higher time frame. So let's go to like the daily. So here's what it looked like on the daily time frame. Okay. What do you notice? Let me just hide everything here so we could get a clearer view. What do you notice about the daily? Do you notice anything specific about how this structure looks? If we look at this point here, what is this big wick doing on the daily time frame? Think about it. If we scroll over to the left, what is it doing? Okay, what's here? What's here? All in these areas here, all in this area, all in this area. These are all going to be orders from the market. What do you think that daily wick is doing? That daily wick is literally grabbing all of the orders, and it goes back. It goes back to this right here. It goes back to 2020. Another thing to look at is, what is this price action here look like? This right here, this sideways, this peak, and sideways. Looks like pretty good head and shoulders pattern for me on the daily time frame. So with all those clues there in mind, okay, this is where you could try to avoid getting caught in the resets, because you notice that once we get past these lows here, I mean, we pretty much have a clear path to go a lot further down. You're not going to avoid resets 100% of the time. It's just not going to happen. Okay, so don't try to be, don't try to be perfect. You're not going to be perfect. So this is just, again, one example of how the trade setup. This is just one pair, right? We have 50 some odd pairs you could trade. Whatever you want to trade, okay, you could use the same strategy. So here's another example of a trade setup. You have euro pound 1 hour time frame, a peak formation high, and then of course you have the crossover. This is the break of structure, and then you get your first retracement, which starts here. So again, if you go ahead and you put your fib from the top to the bottom of that first retracement after the crossover, you see price goes right to 618 and also the 50, and then triggers down. So as far as this trade goes, where would you put your stop? Obviously above the previous peak formation highs, and then you simply just go 2 to 1. 2 to 1 is right about there. If you're looking at it from a perspective of retracements to the left, then the areas that we're talking about as far as retracement goes are here, here, and down here. So these three areas you can use for take profits. But here you can see it ended up resetting anyways and went way lower over time. And so you can see that one trade could have turned into a massive trade if it resets as well. So if we go to the previous day or the previous cycle before that, you can see here previous peak formation low. We have a crossover here, and then the break of structure happens, and then we get the first major pullback. Well, if we go ahead and again put the fib to the first major pullback, this one goes 618, even a little bit deeper, almost to 786, and essentially gets you into the trade to go long. Your stop obviously goes below the low of the previous peak formation, and then you're just going 2 to 1 is literally right here. There's your 2 to 1, and I mean, that's it. As far as targets go, again, you can look to the left, you can use targets. All these retracement areas you can use as targets, and you can see obviously it goes much higher than that. But very simple swing trading strategy, guys. Very simple. Couple rules in place, and that's it. If it doesn't retrace, there is no trade. Okay, so like if you go back to the previous cycle here, you had the crossover, break of structure happened right when we broke below here, and then the first retracement is this retracement here. So again, put your fib to that retracement, and you can see it went to the 50, not to the 618. So if you were an aggressive trader, then you would have been triggered into the trade. If you were a more conservative trader, then you would have not been triggered into the trade. But again, it just depends on what type of trader you are. You go 2 to 1. There's your 2 to 1 trade. Again, we're using previous retracement structures, points as take profits. So any of these areas here would be used for take profit that you can use after 2 to 1 if you want. What I would recommend for anybody trying to trade this is to try to select pairs or try to trade pairs that do not have a lot of resets. What you could do to trade those is you could look at one-way directional trades. So what I mean by that, if you look at, let's say if we look at the S&P 500 index, right? If you're looking at it from a daily time frame, what are you seeing here from a daily time frame going back to 2004? Right? What we're seeing here is that we're in a constant uptrend, right? We're in a constant uptrend. So one thing that you can do to combat the resets is essentially wait for retracement to peak formation lows, and then trade off of peak formation lows to look for buys. Okay? That's what you can do to help combat the resets or whatnots. If you look at this peak formation low here, then obviously you can see the crossover happened here, and then the first retracement. This one does go to the 50 and 618 as well. So that would have been your entry here, and then here is where you could take advantage of the longs for more long-term position, because then that one trade can turn into quite a bit. You may not catch them all, but when you do, they're really big. This is an 8 to 1, almost an 8.5 to 1 risk to reward ratio all the way to the top. Again, they don't happen every single time, and that's okay. But when they do happen, especially on the indexes, when you're looking at it from this aspect of if the index is always like an uptrendy index like the S&P 500, or let's say NAS 100, US 30, same thing. They all follow the stock market. So if you look at them from a daily, monthly time frame, they're all basically a big uptrend, always going higher and higher, and then you obviously have your retracements. Here is NAS 100, and the same thing. If you look at it from, let's say, a weekly standpoint, you can see what I'm talking about, where it's just a huge uptrend. So, you want to capitalize on that. You can, obviously. Here is peak formation low. The crossover happens here, and then you get the first retracement. So if you do the fib from here to the first retracement, it goes 618. There's your entry here. Stop loss obviously goes below the previous peak formation low, and then you just go 2 to 1. Anything after 2 to 1, there's your 2 to 1 trade right there. And obviously still going as we speak. This is so far a 5.5 to 1 risk to reward ratio. So you're using these areas here as your take profits, these previous areas of structure. That's it. The reason you're using those areas is because those are the most those pullback areas have orders sitting on top of them. So the market's generally going to be attracted to those areas to grab orders. So if you're trading, so my advice, if you're trading indices, gold, silver, those kind of pairs that specifically are in a huge uptrend over the daily, weekly, monthly charts, right? If you look at all these pairs, here's US 30 in an uptrend the entire constant time. Yes, there's major pullbacks, absolutely, and all that good stuff. But what I'm saying is, if you can catch the bottom of these pullbacks here with a peak formation low and what we just talked about, then potentially you can ride these out for some time. So these would pay out hugely for you, again, if you can grab them from the bottom. The way you grab them from the bottom is you grab them from the peak formation low. Gold, same scenario. Obviously, it's pretty much always in an uptrend. There's going to be obviously times where it's, where it's down, but obviously you can see that it's majorly in an uptrend. The JP225, same thing, in an uptrend. So it's another great index to trade and grab it off the peak formation lows. The Russell 2000, same thing. I mean, you can see the trend here that we're talking about with indexes. Just make sure that if you're going to do this, how I'm explaining it to you, as far as only looking for buys out of this, is you're going to do it from pairs or indexes that look like this when you go to a weekly or a daily or monthly chart. They have to be in a constant uptrend. That's the whole point. Look at AUD JPY, obviously not in a constant uptrend. So this one you treat as normal. AUD JPY, you can see pretty much huge uptrend since 2012. Okay. And that may not be the same way for the rest of his life, but it is in a huge uptrend. So just to make sure, guys, simple things, right? We have the cycle that happens. We have the peak formation happens up here. We're waiting for the break of this structure here. And then after that, it's simply a pullback that we're waiting for. The pullback that goes back to the 618 or 50, whichever one you want to trade. And then from there, obviously, we're just expecting the price to come down. That's all we're doing. When you simplify it like this is all we're doing. Okay, we're using essentially these areas here as take profit points, and that's it. 2-to-1 risk to reward ratio, using these previous pullbacks as targets. That's it. You're not going to get a trade every single peak formation high or low, so keep that in mind. If the rules don't match, there is no trade. Before you do this in a live environment, please make sure that you back test it to make sure it fits your requirements yourself for your trading. Okay? If it's not for you, that's completely fine, and that's okay. Just don't trade it. Just don't trade it. Okay? But this is just a very simple strategy that anybody can use, simple to understand, as long as you know what's happening with the peak formations. So if you know how to count the peak formations, great. You'll be very good at this because you'll be able to pick out the peak formation lows, highs as they're happening in real time. Well, guys, that is the swing trading strategy. Very simple rules to follow. Little rules to follow, by the way, not a lot. And again, hopefully this brought some value to you and just gave you different aspect to see how you could trade this strategy, more of a swing trading scenario. So with that said, guys, drop me a like on the video, guys. Comment below, guys. Let me know what other swing trading strategies are you guys using yourself to trade right now. What's something different that you're actually trading? Put it in the comments below. Let's talk about it. Until next time, guys, have a good rest of the week trading.